Yo, yo, yo. Welcome back to the channel. Getting into AMC today. What a day for AMC. How is this possible? So AMC today at one point was up, I believe, 10%. Let me go see. From open. So let's do a measurement. That was the high of the day. Yep, 12%. And actually closed down 0.5%. And I know what you're thinking. I know exactly what you're thinking. It's manipulation. Well, in my opinion, everything is manipulation in the stock market. So, and I did another video that was kind of breaking down my SPY trade for the day, where I rode some puts. I bought all the way at the top of the day, rode them all the way to the bottom. And the logic behind that. And I'm only referring to that because, as you guys know, if you've been watching the channel, that following SPY in the broader market has been pretty key to see what was going to happen with AMC's price action on a day-to-day basis. So make sure you check out that video. And while you're here, make sure you smash a like on the video. It helps support the channel, so I appreciate it. Helps the video reach more people. So if you think this content would be valuable to more people, make sure you do that so that YouTube knows. But yeah, so early in the day, I tweeted that these were the levels that I was or the lines that I was watching for AMC. Let me correct this line a little bit here, because remember, we're watching primarily the thing that we're primarily watching is this macro falling wedge, right? This is based on the two bottoms that you had here in July and August, the wicks. As well as the touch point that you have here from the body of the candle on June 2nd, okay, the bottom of the body of the candle. The other lines that I was watching is because you have this downtrend that was established by the very top of that run on June 2nd. You have two touch points here. You flipped it as support as opposed to resistance here, right? And you've kind of, this area has been a zone where you've seen bouncing lately, and you see that you actually got a bounce here in the past couple days of trading, and then this is your most recent downtrend, the yellow line. Okay, so as you can see, you can form a few different falling wedges from this, and that's why we're following these lines. Okay, and as I've discussed a bunch of times, it is sort of an inception sort of thing. So what's the results of today, right? What does today mean? Well, if we look at the volume a little bit closer here, yeah, I mean, look, it does seem that today was a pretty distributive day on AMC, if you're asking me. I think that what you had was a cause for rally based on the volume that was here. And then as you kind of got up here, your volume weakened out leading up to the FOMC meeting. And then you had a dump with the broader market, right? And so that's what we discussed in the video, the other SPY video that I did. But the basic idea is, look, you had this pump happening in the broader market, and it was very low volume relative, right? And it's because everybody's kind of sitting on the sidelines waiting for the FOMC meeting. And so when I saw this pump, especially from the previous day, right? I mean, from the post-market lows of yesterday to the highs, you had 3.5%, right? And to me, this just looks like a big distribution now. And that's kind of what you experience with AMC on the day, unfortunately. Let's look at OBV, though, to get confirmation of this, just to see if OBV will confirm that the volume... Yeah, I mean, look, you ended up with less OBV on the minute chart than you came into the day with, unfortunately. Okay, so what that means is that in the net result was more selling than it was buying. Okay, more shares were sold than were bought on the day, based on OBV. And I know what you're thinking: retail owns the float. Retail is not selling. This guy's a shill. I can't believe that I'm watching this video right now. I know, but I'm just here to tell you that what I'm doing is I'm looking at the chart on a day-to-day basis to understand the price action. And yesterday, you guys know that I was very unenthusiastic about everything that was going on with AMC. If you watched the video, you kind of had this pennant that you were forming. I guess you could call it that. But very, very not fun price action was happening. You were kind of looking for this 50-50. What you got was a breakout to the upside, and then you got sent up, right? And now you went into this literally, like, this looks like the Bitcoin chart essentially. Wyckoff distribution. You got sent down right back to where you came from. Okay, so what's happening now? I would say, oh, you guys are gonna hate me for this, but I would say that you're pretty much exactly where you left off yesterday. And that more than from a price perspective, you are essentially on the daily. You are waiting for a market reaction to this bounce at 1450 that we've discussed for weeks, if not months now. And you got it to a certain degree, but look, you kind of came into this zone of this yellow trend that I had here, pre-drawn. You got rejected down, right? So you're going to continue to channel into the end of this falling wedge. And until we see a break to either side, it's going to be this boring price action. My conviction is that you're going to see a break to the upside, most likely, and then probably some sort of retracement to, like, maybe you'll see it to the $16 level. So it would look something like this. You draw a fib from here to here. There's your 1550, your 786, or maybe 1630. You find support at. And then you get sent up. Oh no, the numbers, they're small. They were small for the SPY video too. Oh no, dude, this happens every video. I am sorry about that. Here you go, big numbers for AMC. So yeah, I mean, this is pretty much what I'm looking at. So I mean, at any given moment, you can pretty much break out to the upside of this. You know, you have all the touches that you need to make this a valid falling wedge, a few different ways that you can draw it if you want to. So, you know, until you get that breakout, things are kind of boring, you know, if I'm being honest with you. We can take a look at OBV just to see what the result of today is. Yep. Not the best, not what you want to see. You still are in a general uptrend from this low, which was 29.50, is what you touched on that day, all the way back in August. But yeah, I mean, you do have to see a reaction on this daily OBV at some point. You're gonna need to see this thing go up. It's, I mean, yeah, on a day-to-day basis, you're really not getting what you need. From a volume and price action perspective, if I'm being honest. I mean, you had your pump today, but obviously that pump just got distributed out. Pretty clear to see. I know that that's not, like, fun. It's not like the thing that you wanted to hear me say when you opened up this video. I'm assuming, unless you're an AMC bear, in which case that'd be kind of weird if you watched AMC videos up until this point. Like, holy shit, man, it's been months, dude. Are you, like, obsessed with the stock? Like, why do you playing puts? Anyway. You do still have this ascending triangle you pretty much broke out of. You're coming back. You're retesting this zone for OBV. I mean, you know, the 4-hour OBV looks a lot better than the daily, I will say. The daily looked good for a while, and now the daily looks pretty bad. But the 4-hour, you do still have that pretty good uptrend, while the price has been on a pretty solid downtrend, which is indicative of accumulation. But yeah, I mean, overall, like I said, and I mean, I guess I'm saying again, you're just looking for the break. You're looking for the breakout, guys. Now let's look at SPY, because I said I was going to do this in the other video, but let's just look at SPY on a more broad scale and, like, what we're expecting from SPY in the near future. Because obviously you've been on a pretty epic downtrend for SPY, and you've been pretty bearish for a while now. So, like, what are some of the levels that we may be watching? Well, what I will say, because if SPY continues to dump, guys, look, I know, a really popular thing for people to say on Twitter and on YouTube when it comes to AMC is, if the market crashes, right, it's going to cause it's going to cause margin calls, right? So if SPY does one of these, it's going to cause margin calls on these hedge funds, and it's going to cause them to cover their short positions, right? Which fundamentally makes sense. I understand it. I get the idea. But don't think that if, like, tomorrow the market crashed, AMC would just do this, okay? That is not in negative beta, okay? That's not how it works. Negative beta is just it's basically a deviation from the broader market, right? So it's not like an inverse correlation where if the market goes up, AMC goes down, and if the market goes down, AMC goes directly up. It's more of like it's detached from a price perspective, and that can be to the upside or the downside. But if the market crashed tomorrow, right? If you had like a COVID apocalypse style move down here, like you did back in 2020, where SPY dumps 60% in the matter of, you know, let's see, 60% in the matter of a couple months. AMC, what I'm telling you is there would be a lot of blood, okay? If that did happen, okay? If that thesis is correct, it is not going to be just like, oh yeah, SPY just goes to shit and then AMC goes to the moon on that day, okay? What's going to happen is while SPY is dumping, while you're reaching for those margin requirements, okay? And by the way, these institutions are in good touch with what's going on in the broader economy, so they're pretty prepared for this. You're going to see AMC just dump, okay? Like crazy stuff, like, right? And then you would have like your MOAS sort of, then it would happen maybe. But it's not going to just be this thing where, oh, AMC is going to experience no pain during this big dump. Believe me, people will be panicking. The broader market will be panicking, and hedge funds that may or may not be short on AMC, maybe just longs, will be dumping their positions to get out. Okay, so if that is your thesis and if that is what you believe in, and I know a lot of you guys will be holding until the bitter end, I get it. And I'm not discounting that, but I just want for people who like are subscribing to that thesis, I just want you guys to understand that, you know, it's not going to just be this like, oh, SPY dumps to $200 and then, you know, AMC goes to $1 million, right? It's not going to be that direct. Maybe after, but not right away, right? What are some other things that we're watching? Damn, I'm definitely going to get all kinds of shill talk for that. That's okay. I don't really care anymore. So we still held our 1450-ish level that we've been watching for a while. This was the previous top before your June run. And then this $12 region is like the support zone of like the top of that trading range that caused your move up. As well, these are key Fibonacci levels. So you're definitely in a pretty good range like we've talked about. And in this larger wedge, you could see where you kind of pop up here to like this $20 region. Maybe you find support again at that 1450 before you break out to the upside. Which is, you know, kind of where I stand on it. What I think is most likely is that sort of double bottomy kind of move like this. Kind of like you saw back here, right? Double bottom looking kind of move before you see a move up. And then once we break out of here, then you have to kind of see how you're going to react to this $30 level. And if you break through the $30 level, how you react to the 45-ish kind of level. And then if you're going to go to $12, like I don't think that it's just going to be like this one move where you break down to the downside. I mean, that could happen. But because of this pattern, I do think it's a little bit more likely that you probably just trade down like this and you break this 1450, there's going to be pain there, and then you have your upside move. But I will say that, you know, if the broader market just pumps tomorrow, then you could get your breakout at any given time. Like I said, you have what you require for this larger falling wedge, okay? And I'll show you an example of this playing out on AMC itself. You know, you want like 3 touches on the top, basically, is what you're looking for. And then you want like 2 or 3 touches on the bottom. This is the one that ended up being like the most valid. Okay. And so, boom, boom. And then you retest it, and then you have your breakout, right? You did the same thing back here. Right? Like you'd say maybe it was something like this. So then you boom, boom. Actually, you came back up, retested this, failed it before you had your breakout, right? And actually, you did the same thing where, just to simplify it, you did come back and retest before you ended up getting your breakout. So that's kind of how falling wedges work. I mean, but this one now you're in this much larger, right? This is a much more significant moment, okay? Because now you've been in this falling wedge for literally, half a year. So now it's like, you come up, test the top of it. Well, really, hold on, because you got the double test here on the bottom of the trend line. So, boom, boom. You hit here. Say you pretty much hit here, hit here, hit here. Now you get sent down. You're retesting the bottom of it, right? So this is a much more significant wedge. This is a much more macro. So the move I would be expecting is much larger. And you could even say that this is like an Elliott ABC, right? Elliott wave ABC, ABC correction down to your 618 Fibonacci, right? So this is a completely normal move. Let me see what this one was on log scale. So when we were measuring this fib here without log scale, we were expecting the bounce at 786, which is what we ended up getting. Yeah, see, you bounced right off your 786. But let's see what it was on log. Yeah, you went down to your 707. What would the macro 707 be for this? I am really expecting strong support. Yeah, like, I mean, I know that I've said like the 1450 is like the major zone, and the reason for that was because that's what you had for the buy button collapse. But look, this is a dramatic. Oh, look, it's all the way up here because the pre-market top was like $25. Trust me, bro. But yeah, so you hung the 618 whenever you got that buy button collapse, and that's why I was saying that this is such a key level for you to be watching, because you want to hang above this 618 as well, just so that you have like the kind of symmetry in the chart. So. That's basically what I'm looking at. Hopefully all that made sense. I know that I jumped around a little bit here, but hopefully you gained something from the video. Make sure you go watch the SPY video. Dang it, SPY's pumping, dude. Come on. Die already. I'm just kidding. But yeah, so that's pretty much it. Hopefully you enjoyed. Make sure you smash a like. Comment your thoughts down below, and until next time.